Okay, traders, welcome and good morning. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, November 15th. We just got the release of US CPI here in New York. Just the numbers are coming in at line or in line with expectations. One strong print was the core year-on-year figure for CPI. October came in at 1.8 versus 1.7. Retail sales also a little bit better than expected. Month on month, we were expecting a flat read. We got a print of 0.2. But we also got an upward revision from last month from 1.9, to 1.9 from 1.6%. So a decent print. Seeing a little bit of a rebound here in the DXY, but nothing that should shift outside of the realm of expectations too much. Good to be with you here this morning. Pooja says, good morning, Mike. Felt like a vacuum without your webinars the last 2 days. Hey, Pooja, great to be back. Always good to see you. Iman says, hello, Michael. Hope you had a super time. Finally, welcome back. We're lost without your input, your awesome strategy. Thanks, Iman. Great to see you as well. Peter, Ziad, Kelly, great to see you guys all in the room. So, with that out of the way, I just wanted to really watch those CPI numbers. I was concerned that we would get a super strong print that would really shift things a little bit out of whack here, but you're seeing that came broadly in line with expectations, a little bit better on the core. Okay, so lots to cover today. On the menu, obviously we'll go over the DXY first thing. Euro with just a rip-a-roo across the board, okay? So the Euro crosses in general. We'll talk about Euro Yen. I highlighted that yesterday. Don't really like that right now. I'm going to tell you right off the bat. Yen is also exceptionally strong, so we don't really want to get too involved with Euro Yen. They're both the strongest performing currencies this morning, so keep that in mind. I will segue into Euro Oz and Euro Key. Euro Oz with a major breakout. Euro Key right back up at resistance. So both of those also things to watch for the Euro crosses. We'll hit the Sterling and dollar CAD more notably. Interesting setup there. Kiwi with a nice little rebound. I'm still looking to get back on the short side there. We'll look at crude and gold and also Ethereum. You might have seen me tweet that chart out just a little bit earlier. It did hit that first initial resistance target that we talked about last week. So it could get a little pullback in Ethereum, but I still do like that trade to the upside as well. All right. It's good to be back. Let me know if you have any other questions or trade setups you want to review. Pooja says, anything on Sterling Kiwi? Bearish bias still in play? I'll take a look. I haven't actually checked out Sterling Kiwi this week, but we'll take a look, Pooja. Let me write that down. Sterling Kiwi. Okay. Hey, Kelly, cheers, mate. He says all smiles with you back. Aussie dollar on the menu, right? It is now. I'm surprised I didn't have that written down. Yeah, I'm still really cautious on Aussie. I want to see some sort of definitive price move here. It either needs to collapse and break down, Eman, or really start to move. I don't like that it's spending so much time here. So we'll look at Aussie still trading at a critical region. Okay, let's jump right in. DXY looks like this. So here's what it looked like yesterday, and we've been bearish. Last week we wanted to stay bearish while below the upper parallel. Last night's update, we said let's stay bearish while below the monthly open, which is 94.63. Also converged on the upper parallel for this near-term slope. Initial targets right down at 93.50, 93.48. Swing lows. Okay, the lower parallel is basically where we're trading right now. Okay, so this thing is pretty clean as far as the technical formation. Again, you just got a bump here on the CPI figures, but I don't think it's going to necessarily interrupt anything. What I do want to note is a couple of different things. If we're holding shorts on the DXY at these levels, hey Mark, great to see you in the room. If you're holding shorts at DXY in these levels, I wouldn't necessarily want to bail completely, but I do expect that we could see some sort of near-term rebound here. The one thing you want to note is that momentum is way in oversold territory. So the momentum signature or profile is on your side if you're on the short. It's just that you were coming into some former lows. We're coming into structural support, so we could see a little bit of a rebound. We want to lower our near-term bearish invalidation level last night from 94.63. Going to go ahead and lower that down to the 94 handle at this point. Okay, if you make it back through the median line for this descending formation, if you make it back through that 236, those former swing highs, former trendline support off the September low, then yeah, we're probably in it all the way up for another run into the upper parallel. But as it stands right now, we're going to go ahead and lower our bearish invalidation level to the 94 handle. So again, could see a little bit of an interruption here. If you look on the near-term charts, we're starting to come back a little bit from the oversold condition, but we're still there. So be cautious, okay? If we do get a rebound, like I said, as long as we stay below 94 handle, you're still looking for that break. Subsequent downside targets are pretty clear. 93 is going to be pretty big, 93.06 into 93.08. You got this 50% retracement of the entire September rally. You got the 2016 low day close, which has been a clear pivot in price as is. And dependent on where we are in time, you also have that slope. Now we do have what I wanted to look at. Lost my train of thought. Anyway, so long story short, could get a little bit of a bounce here. Stay bearish below the parallel, the median line specifically. Again, downside break 93.06, 93.08. It's a pretty big region of support that you want to look at. Take a look at this from the multi-time frame picture, guys. You've all seen this chart multiple times, and it just goes to show you again. If this kind of thing doesn't excite you from the technical side, you might want to just check your pulse. So I don't know if you're in the right market. Here's what the DXY looks like on the daily, and again, or on the weekly rather. And again, just basic slope analysis. Here's your slope support that we've been working off, the 2011 lows, that parallel support, the break saw acceleration. We've been talking about it for the last 4 weeks as resistance. Okay, so it held. Here's the turn lower, and this is why I'm starting to curb my appetite a little bit on the immediate short side. Okay, obviously this is a weekly chart, so we're going to have to revisit this on Friday to really get a better fix, okay, on what's going on. But let's just take an objective look at what's happened. Momentum has turned right at 50. We broke a major long-term upslope, treated it as resistance. Okay, all things that are certainly suggestive that we're still working with this broader downtrend off the 2015, 2016 highs. What else did I want to say? On the near term, on the short side, you have right here, okay, the 200-week moving average, and that comes in just below this longer-term median line, right around 93.20, 93.18. And this is why near term, I think you might get a little bit of a decay here on the short, just getting a little concerned. So if you're holding shorts, I'd be chipping away, taking a little bit off as we get into 93. If you're looking for new exposure, that ship has sailed. We got to wait for a new entry if you're not already short on this. Okay? Any questions on the DXY? Finally getting that breakdown, finally getting some nice price action here as we knew we would. Patience pays, and it looks, again, like an objective break of, at least the initial monthly opening range. And that's happened on a couple of different pairs that we'll look at today. So again, when you get these periods where markets are just congested back and forth and we're kind of all pulling our hair out waiting for something to happen, it's just what markets will do. Patience pays, and here we go on our way. Any questions on the DXY? Again. All right, so let's obviously jump, that was number one. Number two, let's just jump right into the euro, which is, again, 60% comprised. No surprise, here's euro plowing through resistance. So here's what we looked like last night. And what I wanted to highlight with the euro dollar specifically is where we were on the grander scheme of things. We've been trading within this descending channel formation that we've been following. You got a lowered floor type of low in place. Remember, the low that we made at 115.54 exactly was the head and shoulders objective measured move. Okay, so a lot of people are looking at this broad head and shoulders as we continue to say, guys, so many people were looking at it. And when that kind of consensus happens out into the market, 9 times out of 10, it's just not going to materialize. Just always remember the market does not reward the masses. So if there's a trade that's so out there that everyone's on board, you want to be concerned. Okay, and certainly we were looking for some sort of reaction off 115.54. I didn't necessarily think it was going to get this high, but once it broke 16.50, which we talked about last week, was our near-term bearish invalidation, things switched to the upside. And ever since then, it's been a pretty clear-cut trade. Also, note that that move invalidated the objective monthly opening range. Here's your November open. Here's your November high. You set a low in the first week. Again, we tested that high last week. Mid-month break to the upside should have us looking for a late-month high here in euro. Okay, so some very clarity finally in some of these moves. Um, so the focus last night was on this near-term resistance level right here. Okay, former slope support, now resistance. The break saw acceleration, and if this is a legit break of this descending channel formation, we'd want to see this propel acceleration, right? We don't want to see the market dilly-dally through resistance. When we get a break, we either want to see a breakdown accelerate, or if we get a breach, we want to see that top side accelerate. I'd say that's acceleration, at least near term. Okay, so we've cleared the descending channel formation. We've cleared former upslope support, now resistance, now again back above it. You're basically looking for a stretch just a bit higher. Here's what the near-term charts look like, and here's what they look like last night. Okay, here's the 240. Again, we were looking for 1820, and that near-term channel resistance, again, former slope resistance, could have offered a little bit of a pullback if you weren't already long on this one. The entry ideally would have been 1725 with a stop under 1690 or so. Obviously, you didn't get that big of a pullback. It just continued to move forward. So here we are. We took out targets at 115.58. The next upside objective is 118.85. That is the objective 618 retracement of the entire September decline. Okay, same thing as the DXY. Okay, momentum's in overbought. You're deep in overbought. So if you're holding longs, momentum's on your side. I would not get cute and try to short this or even try to play the downside. If we do get a pullback, I want to see some support into 118.20 for a final stretch into that 118.85 level on the euro. Questions on euro dollar? D says, good morning. Late again. No worries, D. Great to see you in the room. So far, we've just covered the DXY, and this is our second one, so I haven't missed much. Any questions on the euro? Okay, so brace for the long haul here. If you're not long, wait for the pullback. 1821 should be your initial support that you'd look for. Stay constructive while above former channel resistance. Should offer some support, so I'm going to go ahead and raise that up. Right now, I'll bring it just to 1725 as our near-term bearish, bullish inval. But basically, if we break below this slope, guys, just be cautious. I wouldn't want to be looking for anything back on the long side. Top side objectives, like I said, beyond the 1855 target, we just took out 1885 is that 618. Also note the October range highs are also right there at 1880. Okay, so a nice spot here for some near-term resistance on euro. Okay, so that is euro. Nice little pop to the upside. So I'm going to touch base on euro yen just because I talked about it yesterday in the update. I don't really want to trade it right now. I'm not really interested in it just because of obviously the developments that we've seen is obviously really strong yen and really strong euro. So it kind of puts this as at odds. That being said, the levels are pretty clear. And we were following this since last week, so I kind of just wanted to give you an update on where we stand. You know, yesterday it was kind of fizzling out just a little bit as far as the momentum signature. We were going to overbought. I was looking for a stretch into 34.28 to look for a pullback for, you know, an opportunity to try to get back long along this median line. Obviously, it fizzled out, and we're trading at that median line now. But with the strength that we're seeing in the yen, obviously dollar yen is playing out magnificently. I don't want to, you know, get very aggressive on this. What I do want to say is if you're holding long euro exposure, you know, we'll take a look at Euro Oz, which is another amazing one on the long side, as at least so far. This might be a decent one to kind of hedge your bets on a yen play without necessarily getting you know, too aggressive on the euro. So if you're holding long euro exposure and you want to see some of that yen play out, again, a short here, I really wouldn't want to take it too deep. I still do think this heads higher, but you know, I'm not really trying to fight this yen play right now. So as it stands, I'm going to go neutral on this. If anything, look for a drop back into the lower parallel, possibly for some support. But to be quite frank with you guys, you know, heading into the U.S. trade session, I'm expecting a whole lot of, you know, sideways to lower movement here in euro yen. Yen is it's just super strong. I mean, if we just take a look at relative performance today, yen is the strongest performer, up 0.82%. This is just versus the dollar per se, but the Kiwi is also a strong performer. Euro would be the third strongest performer with a gain of nearly half a percent point. So if anything, yen strength is a little bit outpacing the euro, and that's why, like I said, if you're holding long euro exposure, this might be one to look at. But other than that, not really my favorite play at this point. Okay, I do want to take a look really quick at the other euro crosses. I didn't necessarily highlight them last night. Where's my pen? Oh, so that's number 3. Number 4, real quick, Euro Oz. So we'll take a look at Aussie dollar in a second, which is flirting with disaster. But here's Euro Oz, and the reason I wanted to highlight this is because we're seeing the top side break of a major level of resistance. This is something that we've been looking at for quite some time. Here's the daily chart, looking at a couple of years. This is the 618 extension of the advance off of last year's low. Excuse me, off of this year's low, 2017 low, subsequent high made in June, subsequent low in July. 618 extension gave you 54. 618 retracement of the entire decline off the 2015 highs gives you 54, 55. So we had a nice 50 pip range of resistance that we've been watching all year long. Okay, we plowed through it yesterday. We closed right at the upper bounds of it, and here's the push and thrust higher. If we close today above these levels, it does suggest way more upside for the pair. Okay, keep in mind that we're talking about a basic trendline resistance that we broke off the highs from 2015. Okay, there's the break. It was kind of messy. It suggests you got plenty more upside to go. The upside break of an ascending median line formation, again, sometimes can fuel the most sharpest part of the rally. I do want to bring your attention just to a basic parallel. If we take a parallel of the slope and extend it off of these highs, this is what I've been watching this morning. Okay, if we close back below this, there's a possibility that you get some sort of exhaustion kickback. In that scenario, again, I want to see price hold 54 as support if this breakout is legit. There's no merit to this parallel just yet because we haven't seen anything extended off the slope really offer any plays since the breakout. But that's what I'll be watching into the close today. And if we're able to close below that, again, it would suggest a near-term exhaustion pullback. Momentum is right up at 70. Wouldn't be surprised. If we close above, and specifically if momentum is able to close above 70, you're basically looking for a run into 158.80. Plenty of upside room. Again, one more thing to keep in mind. This is an objective break of the monthly opening range as well. So very similar to some of the stances that we just looked at in the dollar index and the euro, would suggest you look for that late month high in Euro Oz. Now, I don't have a near-term setup for you per se, which is why I haven't highlighted this. On the intraday charts recently, this is the formation that we've been working with off of the lows from July. So I haven't changed anything. It's the same exact analysis. But as far as like an immediate new type of entry, there's really not much to do here. Okay, it's either a run back into 54 for some support, or look for a reaction near the upper parallel of this near-term formation. Okay, so any questions on Euro Oz? It's hard to, I don't want to advocate you guys jumping into this or chasing it from here, but just note that above 54, you're dealing with somewhat of a pretty significant breakout here from a technical standpoint. Now, Euro Key on ad here is not quite as compelling, and this would be one where I'm very interested to see what happens with Kiwi, because if Kiwi breaks down, Euro Key can finally start to play catch up. But as it stands right now, we're at resistance, plain and simple. 172. You have the 764, retracement of the entire decline off the highs that you made in late 2015. I'm not using that emotional high that we made in August, but certainly using the retracement off of that high, the late 2015 high, you've seen very nice reaction. Both the 618 retracement right there was a perfect high that we hit earlier this year, pulled right off. We broke through, offered some support. 764 is in line with the yearly highs at this point, and just higher is that upper parallel again. So This is one where I think you'll be able to tell a little bit more of a clean definitive break over the next 48, 72 hours into the close of this week. Why? Because it has made a break of the objective monthly opening range and the monthly open. Okay, so 170 was essentially the monthly opening range high, and it is actually the monthly open. So that would dictate we should be looking for a late month high. So if this resistance is going to play catch up and we are going to see euro break higher, it would be a really nice play, specifically if Kiwi finally breaks that support level that we've been watching. We'll go over that in a moment. Kiwi's sitting at a major support again. So if that finally gives out, there's plenty of upside here too. Initial target would just be 76.20 on an upside break. So I just wanted to highlight both of these euro crosses. Again, they're wider range ATR trades, so they are going to be, a little bit heftier. You have to open up your targets and your stops a little bit. So if you're newer to the strategy or if you're a little timid right now, it's fine to put this on the back burner and just kind of track it over the next couple of days. That being said, I do think this divergence in that we saw Euro Aussie break the highs, but we're seeing Euro Kiwi hold the highs is typically either indication that one of them is lying, okay, meaning Euro Aussie might find reverse and break back down if it doesn't hold that high today, or this might be still a lagging breakout, in which case, essentially when Kiwi breaks down, we finally get that upside thrust. And remember, the topside break of an ascending formation typically going to be your strongest part of the rally, okay? And one of the things, if you take a parallel off the highs that we made back there in May, okay, it was right on. It was right on. So don't get faked out. Even if you see a breakout here, you still need to clear basically 73.20 to sort of validate really the acceleration that you'd want to see for an upside target. Again, 76.23, basically 180 after that. But pretty dangerous here. Pretty dangerous. Okay, I'm looking for Euro Kiwi and Euro Oz for one of these to give me the tell. Both flirting with a break of fresh yearly highs. Questions on any of the Euro crosses that we've covered so far? Hey, Johan, see some more people coming into the room. Great to see you guys this morning. Alan, Carlos, DJ, what's going on? Okay, segue back to last night's update. So here we go with the sterling. You guys all know where I stand on the pound. I think Jamie's been in the same boat as I have for some time. Frustration can run thick on this trade. It's sterling. It's notoriously professionally traded market. And I can't get bearish on it. No matter what anyone says, it's still holding upslope support. We're still trading within the broader ascending formation we've been following all year long. And we're still holding above that 200-day moving average. Look, the thing's been range bound. It's been consolidating right above slope support, right above that 100-day moving average. And we're simply looking for a topside break. Ideally, 3270 gives out. It's the monthly open just higher. 618 extension, former swing highs from back here in August. And certainly would be, I think, the onset of a nice little rally. Initial target's 33.38. That's just a soft target, but really you're looking for a rally back into 34.80 or so. Key resistance right back at the Brexit gap, which we just almost kissed back here in September. That comes in line with the median line again, basically into the close of the month. So look, we have to be patient with it. If you're looking for near-term exposure, I guess scalping on the inside of that consolidation range has been an okay trade. For me, I just want to see the breakout. I really want to see this thing break out. It starts with a break above 32.20 to get things going. And again, the targets are really unchanged. So another patient play for us here on sterling, favoring a topside break. Bullish invalidation still remains 30.60. Broader key support, or the level that would put me straight bearish, would be a break below 30.20, 30.10. That move, again, is really dictated and defined more so by the weekly charts. 30.36, that former high day close for the year. Reversal, also swing lows, flirting with a break below this formation, And again, that would basically suggest you have a run all the way into 128. So this is make or break for the pound. I want to stay constructive above 30.30. Need to see a 32.20 break at least near term to get this going back up to the upside. Questions on pound dollar? Did get some of that unemployment data today, or jobless claims from the UK. Claiming count came in at 2.3% as expected, so there really wasn't much to shake anything there. Average weekly earnings a little bit higher than expected at 2.2%, but nothing from the fundamental side should really be messing with this at this point. Okay, that's pound. Let's see 32.20 give out, please. Number 4. Number 5, dollar CAD, also the one that we highlighted last night. Here's what it looks like, or here's what it looked like. So the whole point on this one was that we turned from a pretty big level. We talked about this. We literally almost called the high on this trade with the pullback coming into slope support. And last week, heading into the close, essentially that's what we were looking at for dollar CAD. We said, look, we're at slope support, okay, both on the daily front. Here's the weekly chart for dollar CAD. I'll show you the live one in a moment. This was the level that we were looking for, as sort of a level of which we might want to be a little bit more cautious on the short side. The daily chart, again, basic slope support, 25.98 is the level that needs to break to really validate that a more significant high is in place. So we haven't gotten that yet. Here's what it looked like into the close of last week. Again, we were noting that support at 126.63. Could see a little bit more upside. You start to see some divergence in momentum. So you'd look for a little bit of recovery. Well, recovery got a little bit ahead of itself. You saw the break of that near-term descending channel. We touched it again as support, and I'm looking for this thing to fade. I'm looking to fade a last push higher. Or if we break below, I'd want to see a recovery again to sell. Okay, right here was very difficult from where we were exactly last night. So here's what dollar CAD looks like right now. So you're getting that push a little bit higher as we were wanting. 127.78 is what I noted last night. Ideally 128.35. I don't necessarily think we could get that high. But those are the two levels of which I'm looking to get short off of, long story short. Now, just looking at this a little bit more objectively, momentum is still holding basically 60 as resistance here, and price is just below that August high at 27.78. So, this might end up being the exhaustion high if we break this trend line. But as it stands right now, I just, maybe I'm trigger shy, I don't know, because I've been away for a while, but I just don't have enough conviction to kind of just jump into this yet, even on the near-term chart. So I was checking this out earlier today. Again, if we get one more exhaustion high and it fails ahead of that, it might be worth a short, but still kind of sticking to my guns. I want to see a 27.78, 27.80. Again, if we do get a little bit more of a thrust higher, 28.35, really nice area of confluence where I think you would get a better short. At the end of the day, if you break this low, that'll be a break of this trend line, the longer standing trend line that we've been tracking, okay, off the lows from, what is that, September? Here. So off this low and this low. If we finally break those lows, again, I think it puts you back on course. Initial targets, again, watch for a reaction at 26.63, but you want to see 25, 25.90, 25.99, and then this is the big area of confluence right now. Is right at the 25 handle, 24.90. Big region. First things first, this is going to be our bearish invalidation levels. Long as you stay sub 28.35, looking for some exhaustion here in dollar CAD. Any questions on the loonie? That is number 5. Whoops, 6, 7. Sorry, it's number 7. 6, 7. Okay, a touch real quick. I guess we'll do Aussie first, and then we'll do Kiwi. So number 8, here's what Aussie looks like. Again, I'm going to start off just by showing you the weekly chart that we've been following and why we've been so timid with the Aussie. Look, it's peaking below a pretty big level, and this is why, as many of you know, Aussie over the years has been my favorite trade throughout my career. Actually, I've put more trades in on Aussie dollar than any other pair, so I love trading this. Right now, we're just not getting the reaction that we wanted to see. Okay, 76.30 for the last 4 weeks has been the bane of my existence. Every time we've tried to take a long off that, it's actually panned out pretty well, but it fizzled out real quick. The reason and the technical sort of justification behind that is a basic 38.2 retracement of the entire 2016 rally, a 618 retracement of the near-term rally off the July or May low, excuse me, the 52-week moving average, and a parallel of basic slope support. You saw support, both breaks saw acceleration on either side. Again, a pivot, resistance, break saw acceleration, and there we are. All of those coincided on this 76.30 level for the last 4 weeks. So look, we're probing a little lower. I don't want to try calling a low on this. Interestingly enough, despite dollar weakness, this thing has just been unable to mount any type of counteroffensive. So, I don't want to get stuck being stubborn and trying to continually call it. All I know is I want to see a weekly close above 76.30 if there's hope. And if we do continue lower, I'm not going to play the short, but I'm sure going to be looking for some sort of reaction here. This is my long-term, broader, bullish invalidation level. Okay, there's a lot of things that turned us bullish in the Aussie this year. Namely, it was this singular week in July where we broke a basic consolidation resistance line. It also was a break of the objective yearly opening range, so it suggests to look for a late year high. And basically, you'd want to stay constructive above that. This is problematic for me. So even if we neglect this break here completely, throw that. This is basic trendline support and an objective 50% retracement of a multi-year range. So 74.76 is what I'm looking for if this thing continues lower throughout the course of the week. If we're able to close the week above 76.30, I would dismiss this as a false break, and I would be looking for the rebound to really gather pace. But as it stands right now, who was asking about this for the Aussie? Was that you, Eman? Or yeah, as it stands right now, Eman, I'm very torn. I'm very torn on what to do here. This is sort of a big deal, and for 3 weeks we've been talking about it, and for 3 weeks it's held, like rock solid. What's this here? One last exhaustion low at hand, or is this a false break and we're going to recover before the end of the week? I don't know. But that's what I'm focused on. So that's the weekly chart, sort of from 1,000 feet up. Okay, that's what it looks like on Aussie dollar. Zoom this in a little bit closer of a time frame, and here's what it looks like on the daily. Okay, even within the confines of downslope, there's the basic 618, the 50 line, and again, the last couple of weeks we've been watching that support level hold. This is the daily chart. Now again, objectively, this is a break of the monthly opening range. So that suggests this thing's at risk for making a low into the end of the month. So what do I do here? When you lack that clarity, what do you do here when you're getting those conflicting signals? A break of the monthly opening range, a break of support, but yet on the weekly, you're just flirting with a disaster level. Best thing to do, guys, is kind of wait it out. I think we'll get a little bit more clarity on this. Eman says, yes, I'm in a short trade from 76.30. Okay, so nice entry since yesterday. Don't know what to do right now. Keep or drop. So here's what I would do, Eman. On a trade like that, and God bless you, that was an awesome trade. I mean, again, it's a very tight range here, and we're flirting with disaster. You had the intuition to get in there at 76.30. It was a pretty big level. We tested its resistance, former support. Sure. On a trade like that, here are the levels. Stick to the levels that we publish here on SB, Eman. You know what I mean? As close as you can get to 75, 71 was a soft target. I'd look to take a little off. If you're going to take a little off, your stop needs to come down to break even. Anytime you remove anything off a trade, I always put the stop at break even. I'm not willing to take a loss on the net position. If I was right, initial market reaction took me lower, Eman. It's a near-term trade, right? We're selling at the lows, so we don't want to get ever too overzealous on a trade like that. So we have to stay nimble, right? If you get 75, 71, again, my humble opinion, just Michael Boudreaux's, my personal opinion, I would take something off, a little bit off that trade if you're holding multiple lots, bring your stops down to break even, and see if you can't get that drop into 75, 16. Okay? But at this point, on that trade, either way, I'd be looking to go break even on that pretty quick. Pretty quick. Don't get me wrong, you man. Right now we're still at risk for a move lower, but when we're trading with a level like this of such technical significance, of which we've seen support, I would have wanted to see that break kind of shoot lower if it was going to be a big, big deal. Obviously, dollar strength has been unable, or dollar weakness has been unable to put this, keep this thing afloat. So that's a tell as well, amen. That's a tell as well. Like I said, on the short side though, or on the support side, 75 is end all for me. This is, this is pretty huge. 75, 75, 15. This whole region is pretty massive. Okay, and that again on the weekly chart is right above this critical region of basic slope support off multi-year lows. Make sense? Got it. Awesome, says E-Man. Right on, E-Man. Good trade. Just make sure we're managing that as we get through the trade session here. Keep your eyes focused. I love where you entered from, but that's also the major pivot. Okay, so if we make it back above 76.35, kind of bail on that. Kelly says, I don't know how you do it, but damn, as you do your presentation, you make trading exciting. Hey, cheers, mate. It's you bring a calm into a sea of trouble. So we are looking at the long on the euro dollar at 118.20 as it is knocking on the door. Cheers, Kelly. First of all, I appreciate the commentary here. And man, it is exciting. If trading isn't a fun thing for you guys, then I don't know why we'd do it, right? We love what we do, and it's you have good times, you have bad times, but yeah, when you see all the opportunity that we're finally starting to see, and if you hear the excitement in my voice, it's because for the last couple of weeks, this thing has been like shoving bamboo sticks under my nail. It's just been so boring, and things just haven't been able to move, and for us here on SB, our delight is to bring you guys those opportunities. So when the opportunities dry up, sure, it can get kind of frustrating at times, but hey, when things start moving, we're right back in the swing of things. So appreciate that. We'll for the euro, yeah, I know that Jamie still likes the long. I still like it as well. We talked about that. If we get some sort of corrective pullback, I would love it. But man, this thing looks primed. Okay, it's messing with some pretty serious breakout here. Again, remember on that break, the monthly opening range, 100-day moving average, channel resistance, it all gave out. It all gave out on that singular swing yesterday. So certainly does keep my focus higher. You are behind that trade in Aussie, says E-Man. Cheers. E-Man. Again, my pleasure, guys. Okay, so that was number 8 on the Aussie. Number 9, here is Kiwi. So with Kiwi, again, a trade where we're looking for some exhaustion. And here's the broader premise of the trade on Kiwi. We've also been tracking this one on the weekly charts. 68.30 was absolutely critical. Okay, forget the fact that it's the 2016 Open. In and of itself, it's been a clear pivot in price, and it was the yearly opening range low. So objectively, the emphasis is on a break below 68.30 to really validate a concerted downside bias, not just like I think it's going lower. No, objectively, aside from what anyone personally thinks, there's the yearly range lows. You had a former yearly open there, and if this break is legit, and we have 1, 2, 3 tests, okay, so a confirmed trend line break still keeps the focus lower below that trend line. So ever since we broke that and we came into support here and rebounded, you guys know both here on SB, we've both been saying, look for an upswing, back into resistance, former support to offer that kickback, and that's where you want to be looking for some entries. That's what you want to see hold as resistance for us to favor lower in Kiwi dollar. So on the weekly front, The emphasis and the premise is still against 70. You can stretch that into 70.38, again on a weekly basis, just to account for slope. And again, that 38.2 retracement of the advance off the 2015 low. So I would give myself a little more room as far as the weekly threshold. As long as we stay below 70, 70.38, I want to see this thing lower. The emphasis or the premise is on a break below this. Okay, my problem is that the rally didn't get quite that high, and the pullback is yet again finding support at the yearly low day close. So, you know what levels matter. 70 into 70.30 is major key resistance, 68.30 as major key support. Boom, daily chart looks like this. Again, looking at this objectively from the daily standpoint, since the yearly open, there's your yearly low right at that former 2016 open. The low day close came in at 68.50, so it gave us a nice range of 68.30, 68.50 as key support. We settled last month right there. That is now the monthly opening range low is right in that region. The monthly open is also in that region. And that's the key support that you need to clear in Kiwi. Very plain and simple. I love when things just pan out like that, where it's just black and white. Okay, 68.28 to 68.49. I've been saying 68.30, 68.50, whatever is the major level we need to clear. Period, exclamation point, end of conversation. Now, how do we trade that? Now, again, you know, obviously this stretch is disappointing because I wanted to see a 70 clip to get back on the short side. We didn't get it. So here's the pullback. Again, all you've done is made a simple monthly opening range above support, and that's what you look to play. Okay? If we get another rally, I love Jamie's idea of trying to fade a rally ahead of the monthly opening range highs. Okay, so he's looking for entry near 69.40. And obviously, the break below 68.30, sayonara. 67.40 is just your initial target. That's a Fibonacci consideration for the entire advance from 2015. And then the lower parallel obviously gives you a lot of room, you know, down to 66 and change. But this is huge, guys. This is really, really huge. Monthly opening range lows, 2016 open, 2017 low day close. It's all right here. It's all right here. Clarity on Kiwi. Here's what it looks like on the intraday charts. Okay. Not really convincing. We're basically almost unchanged for the start of the week. This is the near-term ascending slope that we were looking at last week. The emphasis was on a break below 69.20. That's what I told you guys to look for to get bearish. You got the break. Initial targets got taken out. Again, the major key support is here. So yeah, I'm still looking lower, but on this upswing now, you know, as long as we stay below this parallel, which again highlights once more the 70 handle, I'm going to be looking for this thing to fizzle out, looking for an exhaustion rally to sell, inevitably looking for that break below 68.30. Questions on New Zealand dollar? Okay. That is Kiwi. Since we're on the topic of Kiwi, Pooja wanted to look at pound Kiwi. Was that right, Pooja? Let's take a look at what that's doing. I haven't actually checked that out this week. Pound key. Okay. If I'm not mistaken, I think we did highlight pound key not too long ago here on the intraday charts. Give me one sec, right here from last week. So last Thursday we looked at pound key because we were tracking all the pound crosses on the back of the BOE and all that good stuff, and we highlighted this chart right here, and we were noting, look, we love the pound long, we love the Kiwi short. This was when Kiwi was just breaking down. And we were looking for that move towards that 76.30 level, that key threshold of support, the 2016 open that we just talked about. So on a Kiwi week trade, while pound was getting battered, okay, you'd think to yourself, well, hey, if the pound Kiwi cross comes into support, well, That's my best shot at getting a pound long exposure while being short Kiwi, right? And it played out pretty well. So the level of interest against it, or the long side level of interest, was against 87.38. Okay, former swing highs. You had current operative basic trendline support off the August lows in red, and you had downslope support. So ideally, you would get one more drop into that section before the rebound. But at the end of the day, once you clear that median line, topside targets were 90.50, backed by 91.85. So you broke the upside target. You came into 90.50, held as resistance into the close of last week. The pullback fizzled out pretty quick ahead of the Friday lows. Break, and here we are finally tagging that 91.85 level. So it played out pretty well. The question from here, Pooja, which is I think why you probably brought this up, is what do we do from here? Well, I'm more inclined to like the breakout, but I can't advocate getting long here, right? The trade was last week, or the trade was into 91.85. For me, when we took a picture of this, that was the focus for move up into this region. Now that we've reacted off that, you had a 4-hour outside reversal close, okay? Sort of gives me a little bit of a hesitant. It doesn't want to make me be long right now. Okay, that's all I'll just say. It's plain and simple. If it breaks 92 specifically, great. I'm all on board. I think you get 94.30 here in a heartbeat. There's plenty of upside targets to go. This is a trade where I think there's a lot of room for it to stretch. Okay. But as it stands right now, you just tagged initial resistance. The emphasis is really on a break above that 92 barrier, 91.85, to get this thing going. You can bring up your bullish invalidation. So we were heading into bullish invalidation last week at 87.38. From there, I think I can bring that up safely with confidence to this region. Why? Because it's going to be the objective weekly opening range lows. Okay. All right. And then you have the median line. And once again, that longer term upslope off the August lows. That gives you a range 188.84 into 188.50. It's 30 pip range right here. Again, a larger ATR trade, right, guys? Average true range on this is much larger than our typical euro dollar cross or such. So keep that in mind whenever you're trading these exotics. Pooja, does that help? Does that offer some clarity on that? You're asking, is it a bearish bias still in play? So 91.85 is the threshold that invalidates that. Does that make sense? Pooja? We came into that key support last week. I thought 87.38 was going to be the level. We turned just ahead of it. So the focus shifted higher with that break above the median line. But for us to get bullish, or for us to invalidate the bearish trend, 92 needs to give out. 92 needs to give out. Yes, 100% extension off the November 9 low completed. Oh, is that true? November 9th? Let me see that. Well done, Pooja. Right on. Yeah, 91.67 turns out to be the 100% extension. So if it is just corrective on the upside, that's the threshold of which would be major resistance. Wondered if it's a near-term short. It could be, Pooja, for a near-term play, but to be quite frank with you, with where the Kiwi's trading, okay, if it breaks, it's just going to be I think it's just going to be like a massacre type of real sharp sell-off. With the same respect, if sterling breaks to the upside, both those scenarios would fuel a really sharp topside play here. So if you want to be nimble, the outside reversal candle here does certainly put cast a near-term bearish shadow on this. I'd be trading like minimal, a third to a quarter of my typical trade size, and real tight stop against the highs. I mean, I really wouldn't flirt with anything above 92. Constructive above 88, 88, 84, like I said, 88.50, that kind of region right there. Does that make sense? Yes, thanks, says Pooja. All right, cool. Iman says Kiwi Yen was also a fabulous trade. You did cover it last Thursday also? Thanks, Michael. What was that? Oh, Kiwi Yen. Yeah, yeah, yeah. Oh, yeah. Oh, goodness. I almost forgot. I didn't have that on the list for today. Here's what Kiwi Yen did. It was I mean, look, if Kiwi starts to participate, this one would be even stronger. But yes, last week, you're absolutely right. Pure trend line play. Okay, you know me. I'm a big fan of Fibonacci. I've used it my entire trading career. But at the end of the day, nothing supersedes basic support and resistance. Basic support off the lows, one touch, two touch, three touch confirms the break, meant we should be looking at that slope as resistance. With the same respect, the downslope that we were working off of the highs, the upper median line parallel, converged right on that region. So you're absolutely right. Late into last week, we ran right into that, made a massive outside candle right off resistance, shifted the focus lower. Again, we've taken out the first initial downside targets. This is your next target at this point. I choke it up into that 78 level, 78.6 level. That's 77.40. It's also the monthly objective. Well, I'm lying. This is a break of the monthly opening range low, but this is the objective October lows, not this month lows, but last month's lows. So keep that in mind as well. And of course, the 50 line converges on that over the next couple of days or so. So yeah, I still like this one lower. Watch 77.40 though. If you're going to get a rebound, that's the level that we would look to play. Now, if you're not already short and you kind of want to see or kind of gauge what rebound levels might be good, if this holds on a bounce, you know, obviously you want to be looking for the upper parallel. I don't quite think you get that high if you do get the rebound. But this pivot right here, last week's swing lows, this former swing high right here, that converges somewhere around 78.50 on the parallel. So in the scenario where this does hold and you get a rebound, that might be an opportunity to get back short. But a break below 77.40, excuse me, and you'll see this thing, I think, drop pretty quick. Soft target at 76.50, but really you're looking for 75.60 there. Lows for the year. All right, so yeah, thanks for bringing that up, Eman. Kiwi Yen, very interesting play from last week. Absolutely. So that was 9. Sterling Kiwi was 10. Kiwi Yen was 11. Gold. A quick roundabout as we close out the session here. As always, guys, if you have any other questions, feel free to throw them on the message board before we wrap things up. Gold, crude, and Ethereum, real quick. Here's what gold looks like, and the only reason I bring this up is because we've kind of all been wanting to see what's going to happen with this near-term recovery that we saw or earlier this week. Well, last week we closed right above it. That level was 1272. I was looking for that to hold. It dropped a little bit lower to start off this week, but look what happened. Okay, former trendline resistance. It wasn't the cleanest thing, but support and again support. And then this was an objective break of the initial weekly opening range. So we fizzled out just to have a 618 retracement. You know, I want to rework that. And I wanted to add that. So this is what I wanted to show you. So I do like the upside for gold, and this is why, again, the whole picture looks pretty clear in that the dollar index is coming into support, gold is coming into resistance, euro dollars flirting with a break higher, and all of these I think will get a little bit more clarity as we get the next couple of days out and we finally get to see these thresholds either hold or break through. So I can't get excited about gold upside on the immediate front. I still think it's a broader bullish trade any way you look at it, but on the immediate front, I can't get excited about gold right here at 1290 just because, again, it's a key Fibonacci ratio. It has basic slope structure there as far as resistance, and it's also, you know, former swing highs. Former swing highs. This whole region's loaded. So I don't know really how to trade this from here. If you're long, I'd be looking to take some of that off right now, or I would have taken that off on that approach into 1289, 1288. If you're looking for new exposure here, on the pullback, all I can say is, you know, I want to see it hold above 1272, topside break, 1294, and the big region is 1305 into 1309. That's been the big region we've been watching since last month. We just missed it here on that last turn, so that's still going to be the big break zone that you need to see in gold to get this thing going. Okay, so that's just a really quick review on that, number 12. Number 13, also, I just wanted to cover really quick crude. You'll see a lot of people talking about this today on the back of the price action that we've been seeing. So, you know, by the way, this whole turnover in broader risk assets, guys, we've seen you know, stocks have started to pull back pretty aggressively, you know, aggressively relatively speaking, for the last couple of months, but you know, we haven't really necessarily invalidated anything yet, and we're only down about 1% on the major stock indices. So we haven't even gotten a 3% correction yet this year, guys, like in the last 13, 18 months or something, which is absurd. Again, I don't want to be calling a bubble or anything, but I'm just saying things are pretty heavy stacked. So look, here's what U.S. oil looks like. This is the trade chart. This is the chart that we've been following, excuse me, for the last couple of weeks. Here's what it looks like on the daily. So this was a massive, massive, massive break. 54.75 into 55. We talked about that for, I want to say years at this point, because there was a major resistance on the way up here. Okay, 786 retracement, 1618 extension from the advance off last year's low. It was also the objective yearly opening range highs. So this break early this month meant something to me. The pullback, here we are at support. The monthly open is just lower. Final ditch effort, and my broader bullish invalidation level is still at the yearly open. So what that means is I am looking for support basically above the monthly open. I know ideal picture keeps this thing constructive above 54.60. But look, you got some inventory numbers coming out. You got all this OPEC and all this you know, Saudi event risk kind of looming over. If it breaks below, you know, I would expect further drop, but I wouldn't want to get bearish while above 53.80. Okay, that's the level. If we break, certainly changes the picture for me. With regards to playing this constructive move. But as it stands right now, I'm looking for either exhaustion low into 54.70s here or 53.80s or bullish invalidation level. Okay, top side targets unchanged. I want to move these over now to account for time and along this same slope. Okay, so that is crude. Last but not least, I'm running over on time real quick. I just want to talk to you guys about Ethereum. Again, I just tweeted this out on my personal handle and on SB Trade Desk as well. You know, it's a trade that we've been following, and we've been looking for the breakout. So the breakout materialized, and the first target has already hit. So I don't want you know, everyone to start you know, jumping on the bandwagon just yet. But here's what the daily chart looked like. The basic premise of the trade was a focus of the break of that range. You know, we saw a false break of it last month, then we fell back into it, and really, you know, it's been a kind of a stubborn move below 320, kept on failing. So the near-term chart really highlighted this slope and the near-term 1618 extension at 338. That was the first target. Second target is 350, and I still think that's on tap of a bigger zone of resistance. So on the pullback, you know, I want to stay constructive above 321, and at the end of the day, a topside breach, 350 is your big level of resistance. To get through 354, and I think it's off to the races. One thing I did want to note, guys, is this is the slope that we've been working at. One thing is if you just work with basic, I'm going to do this just for a drill here. sometimes it's basic just to keep it as basic as possible. Get rid of that slope. Your basic trend line slope you've been working here. If you take that off the highs, resistance, pretty close. Leaves me a little concerned. Okay, even if we get the stretch higher, that this slope might offer something. So I just wanted to bring this to your attention. Keep your eye on that. If it struggles and starts to kind of fail again, maybe a little bit more of an exhaustion pullback before we continue higher. But 338, that first level has hit. So I'd be looking for a pullback to get back on the long side in Ethereum. Okay, any questions? Finally, your lovely dollar yen did his action to the downside. Eman, I wasn't even going to talk about dollar yen because I think Jamie's been all over this. By the way, quick reminder, Jamie's up at the midweek strategy webinar shortly after I finish here. But yeah, dollar yen, it's kind of finally an I told you so trade, right? For all those haters. We've been bearish ever since the breakdown of this formation, and it took, again, almost 2 weeks for this thing to finally pan out. Even on this break here, I was starting to think, oh, damn, this thing is going to completely just, negate it. But it didn't. It didn't. It was a quick false break as dollar yen, the abomination, always does. There's the break again of those former swing lows. So you could see some initial resistance into 113, but at the end of the day, I'm pretty comfortable staying bearish below the weekly opening range lows, which coincides on that upper parallel, right around 113.25. So that's my new bearish invalidation level for this immediate drop. Again, downside targets. Look for that slope, obviously dependent on time. That's going to be different. But the next confluence region of support is going to be that 38.2 later in the week, and that converges down just below 112. So still looks pretty good here on dollar yen. All right. Okay, guys, I'm going to wrap it up here. Thanks for everyone who attended. Remember, again, like I said, Jamie will be on in just a few hours, and then I will be back tomorrow morning to wrap things up for the week as we close out the end of this week. We're going to have a light webinar schedule next week, guys, as well. Obviously, for Thanksgiving, everyone's going to be traveling here in the United States, so I don't know if we'll get any scalp webinars out, but I will update you on the SB homepage as far as that schedule is concerned. Till then, best of luck trading, and I'll see you guys tomorrow morning. Cheers.